Good morning, good afternoon, good evening, wherever you are in the world today. I hope you are incredible. I have a trade still open that's just been lingering, really. It just feels like it's taking forever to get anywhere. So, my target line's over here, this little red one, and the entry point was over there. Here's all the timestamps and prices for those who are skeptical. I'm just watching it regress towards this range. I have made a promise with myself that I'm only going to close trades when there is a switch up here on the oscillator. So MTOP stands for market structure, time forecast, the oscillator, price projection, and support and resistance. So O for oscillator is what I'm waiting on to close. Why I found this is pretty good to use as a closing strategy is because each time I've thought of getting out of a trade, what the market was doing was just finding a different point to move across to go lower on. And I'm short on this position. So the lower it goes, the more money I make. And I'm at the crosshair, basically the time and price region in which I thought I was going to keep my trade open until. However, what I'm doing is just watching this oscillator and waiting for that to switch. As soon as it's switched, then I will get out of the trade and then lock in whatever profit the market wanted to gift me with. Now, over here, well, let me get back onto here rather. The challenge with trading is that it takes a long time, and relatively speaking, maybe not like in comparison to a salesperson who's got the month to make a target and he works 5 days a week for 4 weeks to get to that target sort of thing. Waiting a couple of days here to close on $2,300, it's okay. It's all relative, right? So, but in the trading world, for me in particular, who likes fast results, it's quite a long time to wait and keep a position open from there to there. I opened the position on the 7th of May. Today is the 9th of May. So it's 2 days of just watching and waiting to close for profit. Now, the other thing is not only are you waiting 2 days, which is something you have to get used to as a pro trader, but also the close position often feels unrewarding. Like over here, price will hang out there for a long period of time, and then again, level below, and so on. And it does so it can etch across the market. But whilst waiting for it to do so, it feels like it's never going to do it. It feels like it's taking forever. And this is where you can psych yourself out, especially when there's like a run, and it looks like nothing here because it's not in real time, and the charting price action moving is in real time, but what I'm talking about where my mouse is, that's not in real time. That's already happened. So when it goes down, and you're not sure if it's going to keep on going down, and it kind of wicks and then climbs back up again, that alarms your like fear system, and you think it's a good idea to close there. But what I'm trying to get through today is if we keep it open and allow it to finish this transition, then that's how you maximize your profits. All right. And how you're able to do that is by only closing on the oscillator when it's switched. All right. So that's what I'm currently doing, and that's what's kept me going. Now, to finish off today's video, because I want to keep it short as I'm doing some coding today and I don't want to spend too much time away from that. So as the price is reducing, what can particularly happen, and I'll go to my other account. This is my demo account, and my other account is, there we go, demo server 4. So basically, you can see here that because my entry point isn't as well positioned as the more riskier position I opened on the other account. So the other account I got in over here, and then watched it head towards my stop loss and also eat the drawdown. So back here, when my mouse is circling, it could have gone either way. It could have gone into an uptrend or continued on the downtrend, but I needed to get past all of that noise to make up its mind. So I got into a position over here, but also kept to the rules. How do I get rid of that? I kept to the rules of keeping the stop loss behind previous turning point, right? So that's exactly where I did it. And again, as I spoke about yesterday, because I've done so, the further away the stop loss is from the target, if you're doing a 1:1 risk reward ratio, the longer it will take to target. Okay, so in my demo account, it's about to hit over here because I got in up there. Whereas over here, I've got in a lot later and there's a lot further to go. So I might not keep this open all the way down to 59,000, which is where it will close in $4,000 profit. I will see what's happening on the 128 and then close it over there. But what I'm trying to say is that it can feel like holding a position open for 2 days and only getting $300 profit isn't worth your while. And a lot of the time, you just want to close just because you're impatient and irritable and frustrated and all those kind of things. So instead of doing that, what I'm going to do is just remain patient and also wait for the switch to happen and then close it at wherever it is. So if it's $400 profit or $500 profit, I'll just lock it in there. And then wait for the rebuild to happen on the trade chart. So the next turning point, kill zone confirmation, transition to the upside, wait for it to hit a kill zone confirmation, and then move down again. So I'll have to wait maybe until next week to open up my next trade. Then ride that back down because on the 512, it's pretty convincing that it wants to go. Well, for it to remain in downtrend, it'll have to break that threshold. So it's said to go below 56,000, and I'll wait for it to go down there. Now, with regards to trading OPM, so that's other people's money. The other people's money comes in at a condition. They've got their own set of rules, and I need to refresh what those conditions are. But if I'm not mistaken, I'm not entirely sure if you're allowed to keep trades open over the weekend, which is kind of a bummer because you miss out on that weekend price action and then going into the next week. So I'll have to refresh on that, especially when it comes to Bitcoin, because I think that might be a special case, as the other markets close typically on a Friday afternoon and typically open on a Monday, depending if it's stocks or indices or just where it's based around the world. All right, so impatience and frustration and discipline, all of that stuff that we carry on our shoulders, I'm trying to offset by strictly following a rule which says I'm only going to close a trade when these lines switch on the oscillator. The oscillator is no good for forecasting. That's where the MTOPS strategy comes in. MTOP strategy will tell you when to open up a trade and why to open up a trade. For example, is it in trend, yada, yada, yada. But what the oscillator does help us with is it switches at confirmed turning points. So you can see that switch over there, and that's where it changed around. This was a bit messy, so I wouldn't have traded this. It's too high risk, death rally, or death alley rather. It's like this ranged zone. But prior to that, if we had opened up a position over here, which would have been outside of kill zone, which is one of our opening requirements at MTOPS, then you would have ridden from there, got the major move to there, and then it closed. You would have got all of that profit, miss out on this high risk stuff. Then once we've got kill zone confirmation here, then ridden it all the way down to where it says it's switched, we would have got all that profit as well. Same thing to this setup. This is a bit of a weird transition, but obviously we have the look forward chart for that. And then closed at the switch, which would have been up here. So for the wall earning transitions, it's a good idea just to close your positions only on the switching of the oscillator and not before then. Oh, that's what I'm trying to say. So the frustration of that comes in when there is a big wick down. Can't really draw it here because it doesn't really offer that, but maybe I'll just do it freehand, I suppose. Let's say, for example, there's a big wick down and then a quick run up. So that wick will come down to close the transition, and then it'll come straight up again um, and start forming and testing the next turning point to the other direction. So what I'm trying to say is that the downfall, it's a kind of a trade-off, but the downfall of doing it that way is that if you're getting in late like I have over here, and it gets to, let's say, a meek little $300 profit, goes down, and then oscillator switches and it comes back up again, then you're going to not see a great amount of profit, because when you're trading securely, you're waiting for the confirmed turning point. So you don't want to get in too early and risk your capital. And also, by getting in a little bit later, then the entry is quite close to perhaps where the transition end will be. And what can happen from experience is that, like over here, it could go down, wick. See where my mouse is circling over there? So just kind of like move along. You could be sleeping or away from your computer or something. It goes down and then builds back up to there. So if your position was in over there, you would close over there, which sucks because you would have lost out of all of that profit, but you would still be profitable. So that's the only drawdown or drawback rather of what I would anticipate that style of thinking or style of closing your trade to be orientated around. Other than that, I think it's much better to rather let the tools close your position for you instead of obsessing and overanalyzing and personalizing the trade. Like for me, $300 is not even worth me getting out of bed in the morning. Um, so I would have closed this and then frustratingly just wanted to open the next trade. But unfortunately, I've learned, well, fortunately and unfortunately, I suppose, but fortunately, I've learned so many times in the past, but that by doing that, it just pretty much set me up for bad decisions in which I would probably overtrade or a revenge trade or open out trades out of frustration. Like doing that, like being um, overly reactive to the market can create a whole bunch of bad discipline. So, for those who are following, I know I've repeated it a lot of times. Just that I've come from a lot of years of getting my ass kicked by the markets. So, this is going to work out for me, and I recommend you try it out yourself. All right, with that said, have a great day further, and I'll see you in the next one. Ciao for now.